Hello and welcome back to Green Pips FX. And on today's video, guys, I'm basically going to be doing a very short one. I'm just trying to explain how to identify pullbacks, right? This is a question that I've been asked more than frequently enough. And I just want to clarify some things that people get wrong. So when you're talking about pullback, right? So say we have an uptrend like that. So when we're talking about pullback, right? Pullbacks which are perhaps I can say very valid and are good to trade from are those kind of pullbacks which exceed 50 which either reach almost or exceed 50% of that extension, right? So what I'm talking about, if we have an extension from a low to a high, we want to see a pullback that comes to at least 50% of this overall extension or even much deeper for us to know that it's a valid pullback. And of course we can trade from this and target the highs. So a simple tool that you could use to do this is of course the Fibonacci tool with some modifications, of course. So you could just hide the rest of the tools and just leave the 0, the 1, and the 5, right? So for example, I'm having this here, right? So I'm putting this 1 to 0, right? And then we have the 5 as the mid level. So and all the other levels have been hidden. So of course, what I was just saying was that if we want to know this is a very good pullback through the fib tool, right? So we're gonna put the fib tool from the low to the high, and then we're gonna wait for this pullback to come to the 50% or this 0.5 area here, right? Or even deeper, right? Of course, we want to see an area of demand in here getting mitigated through smart money concepts. And then from there, we can now take an entry to target the highs, right? Whether it's a confirmation entry, whether it's a risk entry, whatever kind of entry you want to take. But in order for a pullback to be valid, then it should at least reach or go below the 0.5 level for us to be able to even consider trading it, right? So what I'm basically saying is that I don't just go around placing the fib tool and then placing my entry at the 0.5 level with my stop loss below the low. No, I'm not doing that. What I'm saying is that if we want to identify a good pullback, then this is how we should do it. But how you want to trade from that pullback is actually up to you, right? That's not what I'm trying to teach in this session. No, that's going to be reserved for another day. So perhaps let's get some few examples in the actual charts, and then we'll be done for the day. So this is the Euro USD chart, and you can do this within any market in any time frame, right? It does not limit. So say we have a low that creates a high, which creates a low. So this is a downtrend, right? With this breakout structure right here to signify that it's a proper downtrend. So if we're having a downtrend like that, when a high has broken a low and created a lower low, so we're just gonna place our tool from the high to the low, and just want to get intact there, and we're just gonna wait until this price pulls back to this 50 or the 0.5 level or even beyond, right? So there's when we're gonna even start thinking about how to trade this. So basically, I myself would have just taken this area here of supply and traded off of this area here. Now, as you can see, my entry would have been very far from this 0.5 level. But for me to even consider trading this, I had to see this price getting here or even breaking beyond for me to target these lows here, right? So if I was going to trade this, perhaps let's say in a risk entry module, I'll just place my sell entry there, my stop loss here, and I would look to target these lows here, right, for a 2.8 RR trade. Now that's one way to do it. And of course, if you want to refine your entries and get a much tighter stop loss and a bigger RR, that's completely up to you. Now, yet again, we have another breakout structure here. Now, notice what happens. We have another breakout structure here, right? So this is the most important part that I wanted to explain about, right? So we have a high that's breaking a low and creating a new low here, right? So we have a high and a low with this breakout structure with this body here to create, let's just say this low here, because this is just liquidation. And from there, look at what happens, right? So we will just place our tool from the high to the low there, and then look at what price does, right? So price price comes in, right, never reaches our 50% area or the 0.5 level, and then it goes and breaks against structure. So no trades were taken here, right? We didn't even consider trading this area. Why? Because price didn't reach our area for clarification that this is an actual pullback. So this is not an actual pullback, right? So, you know, no trades were taken there. We didn't even think to trade here, right? And then so we have again a high and a low, right, with a break of structure here, with this break of structure here, right? And then we place again our tool from the high to the low, right? So there we have it. Price comes up, reaches our 50% area, and of course, if it was me, I would look to trade from this area of supply here, the last buy to sell, and then this could have been my bearish entry. You know, just a normal entry, no crazy stuff. That's for the, you know, for the guys in the premium. But there, right? So this would have been my entry if I would want to trade from here in just a simple way. Of course, we go deeper into refinements and confirmations and stuff, but it is what it is. So that could be my entry, a total of 3.5 HRR, right? So there we have it, right? So once again, let's just do this one last example. Again, we have a break of structure from a high, which created a low, and then there we place our tool again. Boom. So price comes in, taps our 50% area with the 0.5 level, and of course we have areas of supply in here. If I was you, then I would obviously want to trade from this last buy to sell, and then that could also be my entry here. So my entry there, my stop loss just above the high, and of course I would look to target the lows, right, in a simple entry criteria. And that could be another 3.9, so a 4-hour trade. So that's how we do it with pullbacks, right? If you want to see, if you see an extension and then you're waiting for a pullback, this is an amazing way on how to view price and, you know, actually validate your entries more. And sometimes, yeah, if price was to change character from here, then we would see price coming all the way here. If price was to change this character from so yeah, if price could change its character here and go bullish from there, then we obviously couldn't have gotten any entry here, judging by the way we trade at Green Pips FX Academy. But if you are just looking for a raw entry, or what we call a risk entry, then you could have definitely been hit a stop loss, and then the market from there could change its character and go bullish. So that's just a simple way on how to view price, which I wanted to share with you guys and have more insight on your trading. So if you know, I hope this video was very informative to you, and if it was, don't forget to like, subscribe if you haven't, turn the bell button on for notifications, and until the next one, guys, stay safe, have a nice trading week, and of course, peace out.